Welcome back, everyone, for another deep dive. This time we're going deep into Canadian taxes.
Ooh, fun.
Yeah. So,
everyone loves taxes, right?
well, hopefully by the end of this, we'll all love this one specific tax thing a little bit more, at least.
At least a little more money in your pocket, right?
Exactly.
That's what we like.
It's called the GST HST New Residential Rental Property Rebate.
Yeah, cheap.
It is, we'll call it the NRRP rebate for sure.
Much easier.
Yeah. So, we've got excerpts from the official government guide for this one.
Oh, wow.
It's document number RC423120E1.pdf if you want to follow along at home.
Ooh, getting right into it.
We are so, I guess to start us off, can you maybe just give us a quick rundown of like, what is this rebate? What is it all about?
Yeah, for sure. So, you're probably thinking, wait, I can't claim GST, HST back on my rental properties, right?
Yeah.
And you'd be right for the most part. But businesses can claim something called input tax credits for the GST, HST. They pay on expenses. But landlords of long-term residential rentals, they don't get to do that because the rental income is exempt.
Oh, right. Yeah.
So that's where this NRRP rebate comes in. It's designed to fill that gap.
Okay, so it's like a special exception just for landlords.
Yeah, exactly.
Okay, I like that already. I like where this is going.
More money.
Yeah. So who exactly can benefit from this NRP magic?
So the guide breaks down eligibility into two main categories.
Okay.
Purchasers and builders.
Got it.
So purchasers are people who bought a new or substantially renovated residential rental property from a builder.
Okay, so if I like bought a condo in that new building downtown, I would be a purchaser.
Exactly. Yeah, you got it.
Okay.
Now, the builder category might sound like it's just for the pros, but it's a lot broader than you think.
Oh, really?
Yeah, it includes anyone who constructs or substantially renovates a property to rent out.
So like if I finish my basement and I'm renting it out, I'm a builder.
Yeah, you could be considered a builder for GST, HST purposes.
So I'm like the landlord and the builder. That's where it gets a little confusing for me.
Yeah, and that's where this concept of self-supply comes in.
Self-supply.
Yeah, the government basically looks at it like you sold that property to yourself.
To myself.
And then rented it out.
Okay.
Sounds strange, right?
It does.
But it's really important because that self-supply triggers the GST, HST liability in the first place.
Okay.
Which then makes you eligible for the NRRP rebate.
So I'm getting like the same tax benefits as those big developers because I finished my basement.
It is, yeah. It's the government's way of acknowledging that even DIY landlords incur those GST, HST costs when creating new rental units.
Okay, so it's not just a free-for-all, though, right?
No, it's not.
There are some rules.
There are some rules.
There's a test?
There's a test. Yeah, the guide has a qualifying residential unit test.
Okay, hit me with it.
To make sure only the right properties get this rebate.
Okay, how do I know if my unit makes the cut?
So first up is the unit actually for people to live in.
Okay, residential use.
Residential use only. Yeah. And then do you own it outright co-own lease or sublet it?
Okay, so you have to like actually have the right to rent it out?
Yeah. They want to be sure you have the right to rent it out.
Makes sense. Yeah. Weed out the stammers and stuff.
Exactly.
And what else?
Big one is the unit self-contained. So we're talking its own kitchen, bathroom, living area.
So like no bachelor suites where you share facilities or anything?
No shared facilities for this rebate.
Okay. Gotta have the comforts of home.
Exactly.
What's the last thing?
Last question is all about intent. Will this unit be someone's primary residence for at least a year?
Oh, okay.
So remember, the NRRP is meant to boost long-term rentals, not short-term stays.
Right. Right. Yeah. No Airbnbs or anything.
Exactly.
Okay. So if I pass all those tests, residential use, proper ownership, self-contained, meant for long-term living, I'm in the clear, right?
Not so fast.
Oh, what now?
There's one really important detail that often trips people up.
Okay. I'm listening.
The rebate isn't based on what you paid for the property. It's all about fair market value at a specific point in time.
Isn't fair market value just like a fancy way of saying what I paid?
Not necessarily.
Oh.
So fair market value is what a willing buyer would pay in an open market.
Okay.
It takes into account location condition, what similar properties are selling for.
Mm-hmm.
So you could actually qualify for a larger rebate if the fair market value is higher than your purchase price.
Wait, so I could get back more than what I paid in taxes?
It's possible, yeah. Let's say you bought a property for $400,000, but because of a hot market, the fair market value is now $430,000.
Okay.
Your rebate is calculated on that higher value.
Oh, wow.
But on the flip side, if the market cooled and the fair market value is lower, you get a smaller rebate.
So I need to do my research.
Yeah, you might need a professional appraisal evidence of recent sales in your area or some other documentation.
Okay.
The government could ask for this to verify your calculation.
All right. Sounds like I need to get my paperwork in order. Now, you mentioned something earlier about Ontario residents getting a double dip on rebates.
That's right. Ontario has its own NRRP rebate on top of the federal one.
Oh, wow.
Yeah, so you can claim both.
So Ontario landlords are getting 2 rebates.
2 rebates.
Yeah.
Yeah, this is a huge advantage for Ontario landlords,
Yeah.
potentially making new rental projects more appealing compared to other provinces.
Wow.
Now, there are some nuances to Ontario's program.
Hold that thought.
Oh.
I think we've covered a lot already.
Yeah,
We've got to let our listeners take a breather and let all of this sink in.
take a break.
We'll be back in a flash to unpack those application types and delve deeper into the Ontario bonus, so stay tuned.
Can't wait.
All right, welcome back, everybody.
Back for more.
We are back.
Tax talk.
Yes. So, before the break, we were getting into the Ontario double dip on rebates.
Oh, yeah. The good stuff.
But before we get into that too much, I think we need to talk about the different application types.
Right.
Because it's like choosing your own adventure. But instead of dragons, we've got tax forms.
A little less exciting.
Yeah, so the guide lays out each type clearly.
It does.
So you can find the right fit.
Yeah.
So we'll start with application type 6, lease of building and land.
Okay.
Sounds simple enough.
Straightforward.
So if I'm renting out like a duplex that I bought from a builder or maybe a triplex that I just finished renovating myself, that would probably be this type.
Yeah, exactly. As long as you're leasing those units for residential purposes.
Right.
And you meet a few other conditions. Type 6 is probably your match.
Okay.
So first off, this one's not for co-ops.
Okay.
It's specifically for individual landlords or businesses that are structured differently.
So co-ops have their own thing.
Yeah, they've got their own category.
Makes sense. All right. What else do we need to know about this one?
So your purchase of the property had to have been a taxable transaction.
Oh.
So remember self-supply.
Yeah.
If you built it yourself, that falls under a different type.
Okay. So type 6 is when I bought it from a builder outright.
Exactly. Yeah.
And paid the GST.
You paid GST, STT on that purchase.
Okay.
And of course, at the time that you paid the tax, the property had to meet those qualifying residential unit criteria that we talked about earlier.
Right. Yeah. All those boxes still need to be checked.
Got to check all the boxes.
Residential use, self-contained units, long-term leases.
You got it.
Okay. And I'm guessing I have to have actually paid the GST, ST.
Yes, you need to have actually paid the GST, HST.
Oh, okay.
No freebies here.
No freebies, no sneaky business.
Exactly.
Anything else?
For the federal portion of the rebate, the fair market value of the unit at the time the tax became payable on your purchase can't be more than $450,000.
Oh, okay.
Right.
So there is a limit.
There's a limit, yeah.
Got it. Fair market value under $450,000.
You got it.
Now, what if my property has like a mix of residential and commercial units?
Ooh, good question.
Like apartments above a shop or something?
Yeah, so only the residential units would be eligible for the NRRP rebate.
Okay.
You wouldn't be able to claim the rebate on the commercial portion.
No.
But as a GST-HST registrant, you might be able to claim input tax credits on that part instead.
Oh, okay. So it's important to keep those separate when you're applying.
Exactly.
Yeah.
Separate those out.
Okay. So let's say I do meet all the criteria for type 6.
Okay.
What paperwork do I need?
So you'll need your signed purchase and sale agreement,
Okay.
your statement of adjustments from the purchase and the rental or lease agreement for the unit.
So basically they want proof that I bought it.
They want proof you bought it, the financial details, and confirmation that you're actually renting it out.
Okay. That makes sense. Photocopies are okay.
Photocopies are fine. Just make sure they're clear and legible.
Okay.
And don't forget about deadlines.
Oh, yeah. Deadlines.
You have 2 years from the end of the month in which the tax first became payable on your purchase to file.
Okay.
So don't wait until the last minute.
2 years is a decent window, but I like to just get things done.
I hear that.
So type 6 seems pretty clear.
Yeah.
What about type 7? How is that one different?
So type 7 is specifically when you as the builder sell the building but lease the land it's on.
Okay.
This one's a bit less common, but still important, especially in certain real estate markets.
So like if I build a house on leased land and then sell the house,
But
I keep leasing the land to the new owner.
That's the idea.
Yeah. Okay.
So there are a few things to remember here.
Okay.
You need to be the builder,
Mm.
and the land lease has to be for at least 20 years straight. or include an option to buy the land.
Okay, so it's still geared towards long-term residential use even though someone else owns the building.
Exactly. And you guessed it, fair market value comes into play again.
I knew it.
The fair market value of the unit when the tax became payable on your self-supply can't be over $450,000 to be eligible for the federal part of the rebate.
All right, so that $450,000 seems to be like a recurring theme.
It is a recurring thing.
Okay, anything else unique about Type 7?
Yeah, if you sell to someone who can claim the GST, HST new housing rebate, you have to deduct their rebate from yours when you're calculating the NRRP.
Oh, okay, so it's like you're sharing a piece of the pie.
Yeah, exactly. You're sharing a piece of the pie.
Based on who qualifies for what.
Exactly.
Okay, and for this one, I just need to provide the agreement for the building purchase and land lease.
Along with your statement of adjustments.
Okay, so pretty similar to Type 6.
Pretty similar.
What about the deadline for filing this one?
You have 2 years from the end of the month in which the self-supply happened to file your application.
Okay, 2 years, mark it on the calendar.
Yeah.
So we've done Type 6 and Type 7.
Okay.
Now let's move on to some of the more, shall we say, unique scenarios.
The unique ones.
Starting with Type 8.
Okay.
This is for cooperative housing corporation units.
Co-op.
So they add a layer of complexity.
They do a little bit.
But the guide breaks it down pretty well.
It does.
So with Type 8, you can be either a co-op purchaser or a co-op builder. So remind me again, what's the difference?
A co-op purchaser buys a new or substantially renovated residential complex from a builder, while a co-op builder constructs or renovates a complex themselves.
Okay, so it's the same idea as purchasers and builders for the other types.
Exactly.
But within the co-op world.
Within the co-op world, yeah.
So whether you're a purchaser or a builder, there are some common things to consider.
There are.
Okay, lay it on me.
So first, the unit has to be a qualifying residential unit.
Okay.
Just like with the other types.
Residential use self-contained, intended for long-term residency.
All those tests still apply.
Got it, check.
What else?
I'm listening.
So for co-op purchasers, the purchase of the complex had to have been taxable.
Okay.
And you can't be considered a builder.
So just like Type 6, you bought it outright, paid your GST, HST, no other credits involved.
That's right. Yeah, just like Type 6.
Okay, so for purchasers, it's pretty straightforward.
Pretty straightforward, yeah.
What about the builders?
So for co-op builders, it all comes back to that self-supply concept.
Self-supply, I should have known.
It always comes back.
So you're considered to have made a taxable self-supply of the complex.
Or the addition that you built.
Okay.
And you can't claim input tax credits for that tax.
So you need to have accounted for that self-supply and reported the GST on your return already.
Exactly.
Right.
Got to report that GST.
And I bet there are fair market value limits again.
You bet there are. For both purchasers and builders, the unit's fair market value can't be more than $450,000 when the tax became payable on the purchase or self-supply.
Okay, $450,000.
Yeah.
I'm seeing a pattern here.
There's a pattern.
What about the paperwork for this one? Is it similar?
Similar, but with a co-op twist.
Okay, a co-op twist.
The co-op purchasers need their purchase and sale agreement, statement of adjustments, and a copy of the lease or occupancy agreement with the member who's living in the unit.
Okay, so proof of purchase financials and confirmation of occupancy.
Exactly, yeah. Got to have all of those things.
Makes sense. What if I'm a co-op builder?
Then you would just provide the lease or occupancy agreement with the member.
Okay, so much simpler.
Much simpler.
And how long do co-ops have to file this one?
The deadline is 2 years from the end of the month in which you gave occupancy to a member under an exempt long-term residential lease.
2 years. Got it.
Yeah.
Now, one more co-op thing I'm curious about.
Okay.
What happens if the co-op sells a share that gives the purchaser the right to occupy a unit?
Oh, good question.
Does that change things?
Yeah, that's a great point. If a member buys a share and is eligible to claim the GST HST new housing rebate, it can impact the co-op's NRRP rebate.
Okay, so it's like they need to coordinate.
They got to coordinate, yeah.
To make sure the right amount of rebate goes to the right party.
Exactly. Got to make sure everything's balanced.
So the co-op would deduct the member's new housing rebate amount when calculating their own NRRP rebate.
That's right, yeah.
Okay, so they have to work together.
Working together.
All right, let's tackle the last application type.
Okay.
Type 9, lease of land.
Lease of land.
This one always makes me scratch my head a little bit.
It's a little tricky.
What does it cover?
So type 9 is the least common, but it's for when you lease land to someone who's going to build or place a residential unit on it.
Okay.
So think of it like providing the foundation for someone to build their home.
So things like mobile home parks or long-term land leases where the tenant builds the actual home?
You got it.
Okay.
You're providing the land for residential use, even if you're not involved in the construction itself.
Okay, so if I'm just leasing the land, do I even qualify?
Good question.
Because I'm not the one paying GST, HST on building materials.
So yeah, this is where that self-supply concept comes in again.
Self-supply, it's everywhere.
It's everywhere.
So when you lease land for residential use, it's considered a taxable self-supply of that land as if you sold it to yourself and then leased it out. Okay, so even though I didn't buy any lumber or hire any contractors, I'm still seen as having incurred GST, HST.
That's right.
Through self-supply.
Through self-supply, yeah.
Okay, so for type 9, I need to be leasing the land for residential use and have accounted for that self-supply.
Tax return, yeah.
Okay, what about the fair market value limitations? Are they here too?
They are absolutely. For type 9, the fair market value of the land can't be over $112,500 when the tax became payable on the self-supply for you to be eligible for the federal rebate.
Okay, so a different threshold.
Different threshold.
But same principle.
Same principle. Fair market value is king.
Okay. What do I need to submit with this application?
Just the rental or lease agreement for the land.
Okay.
Proof that it's being used for residential purposes.
Simple enough, and the deadline is 2 years.
2 years from the end of the month when that self-supply happened.
I type 7.
You got it. You're on a roll.
All right. I think we've officially conquered all the application types.
We did it.
We've covered who's eligible, what paperwork you need, those deadlines, even some potential pitfalls.
You gotta watch out for those.
I'm feeling like a bit of a tax rebate pro now.
You've absorbed a lot of information today.
Yeah, but those official guide documents are like the ultimate resource.
They are your Bible.
They've got in-depth examples, calculations, even diagrams.
Yeah, they really break it down.
To help you through the process.
Step by step.
So they're basically our treasure map to tax rebate gold.
They are exactly. We've just provided the compass, but it's up to you to follow the map and see if you can strike gold.
I love that analogy.
Find that gold.
Speaking of treasure, what about that Ontario bonus we talked about?
Oh, yeah, the Ontario bonus?
I think our Ontario listeners are on the edge of their seats.
They should be.
So we've established that they can potentially get both rebates, the federal and the provincial one?
Yeah, 2 rebates.
But what makes this Ontario rebate different?
So one of the most exciting differences is that the Ontario NRRP rebate might be available even if the fair market value of the unit is over that $450,000 limit we keep talking about.
Wait, seriously? No fair market value limit?
No hard limit.
That's amazing.
For Ontario.
Wow.
Now, there is a slight catch.
I catch.
While there's no hard limit on the fair market value, the Ontario rebate amount can't be more than $24,000 per unit.
Okay, so there's a cap on the amount.
There's a cap. Yeah.
But no strict fair market value cutoff like the federal one.
That's right.
That's still a huge win.
Huge win for Ontario landlords.
Okay. Anything else that's different about it?
The application process is a little bit different.
Okay.
You'll need to fill out a separate form called the GST 524 Ontario Rebate Schedule, along with the federal forms we've discussed.
Okay, so an extra form for Ontario residents.
An extra form, yeah.
But I'm assuming it's not too complicated.
Not at all. It's similar to the federal forms and guides you through the calculations step by step.
Okay, that's a relief.
Easy peasy.
So Ontario listeners, make sure you grab that extra form and explore all the details of this rebate. You might be surprised at how much you can save.
Yeah, it's worth looking into for sure.
Now, is there anything else we should mention about the Ontario rebate?
One last thing. If you're a co-op builder and you sell a share to a member who can claim the provincial new housing rebate, you have to deduct their rebate amount when calculating your own Ontario NRRP rebate.
Okay, so it's like that rebate dance that we mentioned before.
That rebate dance is back.
But at the provincial level.
At the provincial level, yeah.
Making sure the right amount goes to the right party.
Exactly.
All right, I think we've officially covered everything about the NRRP rebate.
I think so.
We've done federal and Ontario.
We do it.
We've explored the types, eligibility, paperwork deadlines, even the repayment scenarios.
Yeah, it's been a lot.
I feel like a tax rebate guru now.
Yes, you do.
But the real test is putting this knowledge to work.
That's right.
So it's time to take what you've learned, dive into those official guide documents, and see if you qualify.
You never know, you might be eligible
for some of that sweet tax relief.
Sweet tax relief.
Maybe you'll become a tax rebate advisor for your friends and family.
Yeah, start a new side hustle.
Exactly.
Now,
and if you do,
tell them you heard it here.
On the deep dive.
The deep dive.
But before you go off and conquer the world of Canadian taxes, we have one final thought-provoking question for you to ponder.
Ooh, I love these.
So we've talked about all the benefits of this rebate, but are there any potential downsides or unintended consequences of this program.
Oh, interesting.
Something to think about.
Yeah.
As you explore the world of tax policy.
It's a wild world out there.
That's a great point. Every policy has its trade-offs.
It does.
And it's important to be aware of them.
Absolutely.
It's all part of being an informed and engaged citizen.
Well said.
So keep those brains buzzing, keep those curiosity fires burning, and keep exploring the complexities of the world around us.
That's what we like to hear.
All right, so we've covered a lot today.
A lot.
So let's take another break to let all of this sink in.
Take a break.
When we come back, we'll break down how to actually calculate the NRRP rebate.
The numbers.
So you can start figuring out just how much money you could be getting back. Don't go anywhere.
We'll be right back.
All right, and we're back, everybody, for the grand finale.
The moment you've all been waiting for.
The numbers.
The calculator.
We've explored who's eligible, all those different application types. But now we get to actually figure out how to calculate this rebate.
See if it's worth all the effort.
Exactly.
Yeah.
So this is where those official guide documents really shine.
They do.
I mean, they lay it all out.
They do. They give you formulas.
Step-by-step instructions.
Examples.
But maybe we can just walk people through the general idea.
Yeah, a high-level overview.
So we don't get lost in the weeds.
So you don't pull out your hair?
Yeah, exactly. I'm ready to put on my accountant hat and see what we're working with here.
Let's crunch some numbers.
Okay, so where do we even start?
Remember how we talked about fair market value? Like a broken record?
Yeah, fair market value, fair market value.
That's where it all begins.
Okay.
Whether you're a purchaser or a builder, the rebate is a percentage of the GST HST you paid, or are considered to have paid based on that fair market value.
So higher fair market value, higher potential rebate.
Generally, yes. But there are some things to keep in mind.
Okay, I'm listening.
Like those maximum rebate amounts.
Right.
Depending on the property type.
Mm-hmm.
And the GST HST rate.
So even if my property is worth $1 gazillion,
right,
there's a limit to how much I can get back.
There is a limit. It's all about keeping things fair and balanced.
Okay. Makes sense. You also mentioned different GST HST rates.
Oh, yeah, the Canadian tax landscape.
How do those factor in?
Well, it's a patchwork, right?
Yeah.
Some provinces harmonize their sales taxes with the GST.
Mm-hmm.
Others have their own separate systems.
Right. Yeah, it's a whole thing.
So the rate you use in the calculation will depend on where your property is located.
So I need to know my provincial GST HST rate before I even start?
Absolutely, before you even touch that calculator.
Okay, good to know. And of course, Ontario has its own separate NRRP rebate program.
That's right.
With its own percentage.
Separate calculations.
Maximum rebate amounts.
It can get a little confusing.
Yeah, double the calculations, but potentially double the rewards.
That's the bright side.
And I'm sure the guide lays it all out nicely.
It does. It really does. It breaks it down step by step, even if you're not a math whiz.
That's good because I am not a math whiz. Don't worry,
Yeah.
You got this.
All right, so we've got fair market value, the maximum rebate amounts,
Yes,
and the GST HST rates.
the key ingredients.
Anything else you need to keep in mind?
Well, there are a few other things that could come up.
Okay, like what?
Like if you're claiming the rebate for a property that's only partially used for residential purposes.
Right, like that mixed-use building we talked about with the apartments and the shop.
Exactly. You'd need to allocate the GST HST accordingly. Only the portion related to the residential use qualifies.
Okay, so even more number crunching.
A little bit more.
But if it means more money in my pocket, I'll do it.
That's the spirit.
Okay, so attention to detail is key.
Absolutely. Make sure you're applying the right rules to your specific situation. Okay. Anything else we should mention about the NRRP before we wrap things up?
Well, just remember those repayment scenarios.
Right.
Make sure you understand those fully before making any decisions.
Yeah, nobody wants to get hit with a big repayment bill down the road.
Exactly. It's always better to be safe than sorry.
Okay. And those official guide documents?
Your Bible.
They're there to help you.
They have all the details you could possibly need.
All right. I think we've officially covered everything there is to know about the NRRP rebate.
You did it.
Basic concept to the nitty-gritty calculations.
It's been a journey.
It has, but the real learning starts now.
Now it's your turn.
So take this knowledge, dive into those documents,
Do your research.
and see what you might be eligible for.
You might be surprised.
Maybe even develop your own strategies for maximizing your tax benefits.
Become a tax pro.
But before you go off and do all that,
Okay.
one last thought-provoking question.
I was wondering when this was coming.
So we've talked about all the benefits of this rebate,
Lots of benefits.
but are there any potential downsides or unintended consequences of this program?
Ooh, that's a good one.
Something to think about as you explore the world of tax policies.
There's always another layer.
Every policy has its trade-offs, right?
It does.
So it's important to be aware of those different angles.
Absolutely.
Okay, so keep those brains buzzing.
Keep learning.
Keep those curiosity fires burning.
Explore the world.
And we will see you next time for another deep dive.
Bye, everyone.